Got a little workshop for you. Mortgage 101, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call. 800-306-1990. 800-306-1990. Rising home prices continue to fuel growing home equity. That is our subject today. Dr. Selma Happ, Chief Economist, CoreLogic, tells us rising home prices continue to fuel growing home equity, which at $298,000 per average borrower remain near historic highs at the end of the 2023. By extension, at 43%, the average loan-to-value ratio of U.S. borrowers has also remained in line with record lows, which suggests that the typical homeowner has notable home equity reserves that can be tapped into if needed. Take a look. I've talked to you about this one before. rsrhomeselect.com. rsrhomeselect.com. Tap into that equity in a smart way. Get your loan paid off as quick as possible. Make your strategic investments. So quarter over quarter, what percentage of change in home prices is dramatically increasing every single quarter. And if you're looking at watching us on ronsiegelradio.tv, any of our socials with ABC News and Talk, AM 1490 video feed, you're seeing some of the charts that I'm talking about right here in the process. And it comes to us from our friends over at Keeping Current Matters. They go through a lot of this stuff for us, or they give us a lot of do the right research for us. But the national average, quarter over quarter, national average up 1.5%. California is generally a bit higher than that, and I can't see the numbers in here, but I think it says on there that California is up like 1.3%, so we're a little below the national average. 5 years, 42% for California, 59% is the national average. Since 1991, 311%, national 317% in California. And if we look at year over year, 4.9% appreciation in California. So we're seeing a lot of appreciation out here. And do you want to capture that? That's the big issue right there, is are you in position to capture it? U.S. house, FHFA, U.S. house prices rose 6.5% between the fourth quarter of 2022 and the fourth quarter of 2023. According to the Federal Housing Finance Agency, FHFA, House Price Index, prices are up 1.5% compared to the third quarter of 2023. Price appreciation year over year, seasonally adjusted for purchases. Again, 48, I think I mentioned this in the opening segment, 48 consecutive quarters of positive appreciation. 48 quarters. That's going back to 2012. Now, think about that concept, because there's not a lot of investments that you can go into that's going to have that kind of price appreciation and consistency. Now, we've talked to you in the past. I think it was 2006 was the only year going back to 1942 where there's been a 10-year period where real estate values, if you look at 2006, 2016, the values were not up. They were down about, I think, 3 or 4%. But other than that, every year every 10-year period, they're up. Home equity gains. So, yeah, I know that I mentioned in a little bit ago that California is not quite as high in a percentage rate as some of the other states, but on a national average, think about this concept. On a national average, year over year, fourth quarter 2023, let's see, California up $49,000. The rest of the country, $24,000. When I do a lot of these numbers, I go through and I give them to you. And I do tell you that, you could probably double it for California. Well, here it's a little more than double. In the fourth quarter 2023, the average U.S. homeowner gained approximately $24,000. Again, California, $49,000 in equity during the past year. Now, there's still a lot of people with a lot of equity in their houses. Why do I mention that? 67.4% have paid off their mortgages or have at least 50% equity. Now, do you know what your rate of return is on home equity? 0. What other investment would you put in that you got a 0 rate of return? But people say, I like that. Okay, so you like it. I get it. That's an emotional issue. But from a financial standpoint, is it the best bet for you? 38.7% Own the home free and clear. 28.7% mortgage homes with less than 50% equity, 33% mortgage homes with less than 50% equity. I'm sorry, 28% is greater than 50% equity. That's why I talked to you about making use of the Geneva's Home Select product. And you can go to rsrhomeselect.com, rsrhomeselect.com, and you'll be able to get a video on the whole thing and see why I recommend this. You have access to your equity whenever you want it. You pay off the loan. And I was on a call yesterday where we were talking about a recent simulation where the effective APR for this family was 0.6%. Not 6%, not 1%, 0.6. January 2024, year-over-year house appreciation, according to FHFA, plus 6.3%. CoreLogic, 5.8%. S&P Case-Shiller, U.S. home average, 6%. They all use a little bit different data to come up with their numbers. That's why they vary. FHFA is dealing with homes with a conforming loan amount. CoreLogic includes the jumbo loans and cash buyers. So they're going to get you a little bit of different data. Year-over-year percentage change in price, U.S. Home Price Insights, February 2024. The actual data is 5.5%. Forecasted for 2025, 3.1%. So there's, and each of the last few years, it's been understated. The forecasts have been low. Lawrence Yun, chief economist, National Association of Realtors, says prices will remain firm and will not decline on a national level. Price appreciation over the last 60 years. Wow. Average sales price of houses sold in the United States. It's just really, really dramatic, the increase going from 1963 to 2023. Huge swings. Now, the ironic part is the rent number, the rent chart looks exactly the same. If you look at the rent, it's straight up pretty much over the last 60 years. If you look back at the chart we just showed you, price appreciation, they look like almost the exact same charts, except one of them goes in your pocket and one of them goes in your landlord's pocket. Just throw that out there for you. Now, why do I bring all of this up? Why is it so important for you to understand these things? Because the gap in net worth is widening. The gap in 2010 of homeowners to renters. Homeowners net worth 2010, $187,000. Renters, $5,400. $181,600 was the gap. The gap in net worth in 2022, last numbers we had available, this is according to the Fed, $10,400 for renters, $396,200 was the net worth for the homeowner. Massive. Homeowner's net worth almost 40 times greater. Again, $396,200 to $10,400. Homeowners build wealth across incomes. So regardless of whether you make a lot of money or not as much money, the net worth is greater for homeowners in every one of the income categories. 31 to 56,000, 56 to 91,000, 91 to 152, 152 to 249, and over 249,000. Every one shows that homeowners build wealth across incomes. Are you part of that group? Just throw that out there for you. Housing is a crucial piece of net worth, of your financial package. Home value component of net worth, substantial at every income level. And again, just another chart that shows the comparisons. Equity in primary residence, under $31,300. Equity in primary residence, $104,000. How do you determine equity? I get people that ask me that. It's the amount you owe subtracted from the property value. Do you want your property value? RSR myhomeiq.com. RSR myhomeiq.com. So that's where you're going to get that from. RSR myhomeiq.com. Let's continue. We only got a couple more minutes left. Opting for a smaller, more budget-friendly house means you don't have to save as much for down payment and upfront costs. Start small. You don't have to start with the 4-bedroom house with the white picket fence and a pool. You can go and start with a smaller property. And this comes from Veterans United. Veterans, you don't even have to make a down payment. As long as you can afford the payment, you're in good shape. I'm not saying go to Veterans United. That might not be your best bet. Roger Ashworth, analyst, Goldman Sachs, quote, the largest demographic in the U.S. is 30 to 39-year-olds, and it's going to continue to grow for the next several years. That's why life events start to happen in terms of having kids, for example. Some of these people will be making the decision to buy regardless of how rental affordability compares. But it definitely still factors in. That's why you need to get the information from our friends at First Home IQ. Take the quiz, and they've got a lot of information that'll come following that if you want it. Not only the trip to Nashville. RSRFHIQ.com. RSRFHIQ.com.